The May jobless rate rose to 7.6%. That was up 0.1% from the April rate. In all, 175,000 jobs were added, but there has been a significant slowdown in jobs being created compared to November through February. Joining us to talk this morning about what the numbers mean and what they mean for your money is Lance Roberts, the host of Street Talk Live. You can hear weeknights on 700 KSEV radio. Were the numbers good? Were they bad? Were they mixed?
Really kind of neither.
Kind of lukewarm?
Yeah, I guess it's the best way to put it. I mean, we created 175,000 jobs, and the one thing that most of the media doesn't kind of tie to that is how much did the population grow? The population is growing faster than we're creating jobs. So yes, we're creating some jobs, but only enough just to keep up with population growth. We're not growing jobs at a rate that's going to increase economic prosperity, and this is why you're not seeing labor force participation rise.
What does that mean, Lance? Labor force participation. There are some people who are not looking for a job anymore, or they dropped out, or they gave up, or they're on food disability or something like that, right? I mean, and they're not included in these numbers.
Well, that's the big problem. You know, how many people are on, unemployment claims now running more than 52 weeks? We have 99 weeks of unemployment. Well, we don't count somebody that is still on claims for longer than 52 weeks.
Oh, I didn't know that.
We don't count people on disability because we assume that they can't work, but yet to claim disability, all you have to do is fill out a form and just say, oh, my back hurts. And nobody really verifies or checks that. So we have the largest number of people on disability claims in history right now. 90 million people on food stamps. Labor force participation is a look at the total population and the number of people that could be working in the population and the number of people that actually are. Okay, that rate is now at the lowest level we've seen since 1979. The difference is that in 1979, the labor force participation rate was rising, not falling.
Wow.
And it's a very different story and really underlies the weakness here.
Nevertheless, the stock market has had a really good year up until the last few days. Now, there were some whispers from the Federal Reserve and Ben Bernanke that they may start to ease the so-called quantitative easing. By the way, here's a look at the big board there in New York City there, where the Dow is responding pretty favorably to the jobs report this morning. But he has hinted that maybe they are going to eventually taper off their bond buying program and so forth. That kind of spooked the market for a couple days.
Well, yes, and the employment report out today is probably not going to really move that needle much in one direction or the other. And don't kind of misconstrue the bounce today. The bounce today
might be unrelated.
It really is. The market's been very oversold for the last 2 weeks, and we're getting what's called an oversold bounce. Nothing goes straight down. And so a little bit of positive news from the employment report tomorrow certainly helps provide that catalyst for that bounce, but we have starting a correction period, so be a little bit cautious here about chasing the market at this point. And we're going to discuss this a lot more in our newsletter this weekend from a technical perspective, but there's some worry here going into the summer that we might see a little bit bigger correction.
Okay. When and if it does happen quickly, buying opportunity or run
It'll be a buying opportunity.
Okay.
There you go.
All right. We want to check in with Chris. We're talking rugby this morning.